Sound check. Good morning, everyone. Quick sound check. Excellent. Okay, good morning, everyone. It is Monday, June 22nd, 2026. New day, new week, fresh start. Welcome to the Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple: live futures trading, real-time technical analysis, and actionable trade setups, all with the focus on building the real trading skills and the mindset designed to drive consistent profitability. Every morning we come in with the same goal: to outline the structure before the open so that we're operating in alignment with the day's dominant forces. Not guessing, not chasing. All right, team, let's find out. Let's take a look at the charts. Let's find out where we are going to get our doubloons today. So quick, Michael, in regards to your question, today is S1H. Just double check that. We're on target with that. And Delphine, you are correct. I just checked with David. It is cycle day 3, and that's why I tend to default to David on the cycle days, because if you remember, before I knew David, I typically would get mixed up in my cycle day count, and I was not counting the holiday shortened session on Friday as a cycle day, but he counts it. So it's both systems, the cycle day and the execution clock have different guidelines and how the cycles are calculated. So David has a better grip on that. So yeah, it's an update. Today's is cycle day 3. All right, team. Hey, listen, we're short on time. I got in late last night. We're not going to get into the typical pre-market prep. I just want to highlight the higher time frame, though, because I think that that's what's most important. And with that said, let's just jump into the weekly chart. So last week we had this doji print here at the highs, and the first question and the first thing that stands out to me is I'm asking myself, was this a look above and fail? Right? We looked above last week's high, and then we came right back in. And although the week closed positively, right, we did close right back into the range from the big down week. All right, so let's just keep that in our narrative. Typically, a doji at a high signals, a consolidation that's more bullish than bearish. It's just that topping tail it has me on alert. I certainly think that if we can break above and get 75s to stick, I think that that's going to be constructive for the bulls. Yeah, let's take a look at the daily chart. All right, not much to garner from that. We had the early high on Monday, the look above and fail. Okay, we put in the high at 76.4875, came right back down, and now we are coming up to test the higher portion of that balance area. All right, let's get to the 4-hour chart. Market is set to open in just a few minutes. Yeah, and this is so we looked above on Monday morning, and then we came back in pretty hard. Right, for the rest of the week, that early Monday morning was the high, and then since then it's just been lower price action. All right, so we're opening here at, immediately, look at this. We opened at 75.73. We put in a low at 75.71, and it's off to the races. All right, that's pretty constructive, I would say. All right, now we're going to stay on alert here for continuation. 75.73 is our open. Let's take a look at the low. Okay. All right, let's stay on alert here for continuation. We have a really constructive opening print here. We have a pretty much a 20-point move higher just off the open. So stay on alert here, right? We want to see in this divergence between ES and NQ. Thanks, appreciate it. So what I'm on alert for is, you know, is a pattern that repeats like last week, right? Where we opened at highs and the market failed to. We opened Monday morning, traded higher, and we looked above the overnight high. We looked above the all-time high, and what happened? The market just fizzled out. It collapsed after that. All right. So one thing I want to do also here is you're going to see. I'm going to measure out this move, basically taking the Monday high to our last. I believe that was Thursday. No, Wednesday low. Just want to get quick eyes on this measurement. You can see we're already breaching above the 61.8. All right, let's take a look. Take another look at our fib clusters. Okay, what's above us here? All right, so we have 76.06. Going to take a look at the market blueprint, make sure that I'm in alignment with my plan. All right. Continuation long, 75.70. So yeah, that continuation long triggered. We are above 75.70. Hey, stay on alert here. We're coming in pretty hard, guys. All right, okay. That is a pretty serious wick. However, it's a 5-minute chart, right? And we still have 2 minutes to the close. Let's see if how this settles out. Bulls want to hold this low volume node at 75.75. Okay. All right. All right. Good morning, Rockin' Rufus. How are you? Welcome. Glad you can join. Welcome to a new week. Hey, this is I'm a little bit more hesitant on weeks that have a holiday in them because markets can tend to act a little bit squirrely on those weeks. So I'm glad we put that behind us. And remember, all right, team, so we're tracking the ES here. If you're just joining us, Manny from Pitbull Traders, we're looking at the ES. We're tracking the ES. Now, remember, the one thing that we're focused in on for today is the fact that last Monday was the high of the early high of the week. Okay, so if you recall, last Monday, our all-time high was 76.32. The market traded up to 76.46. And then immediately that traded right back into the range, right back below the overnight high, right back below the all-time high. And subsequently, that turned out to be the high of the week. Okay, so the market traded above value on that day, and then it came right back into value. All right, and we track value very closely. Again, it being the direction of value. So the first step is always simple. Price price successfully trades above a prior high or an overnight high or a value area or a balance range, buyers appear to be in control as they are right now. They just came in and held that 75 low volume node. The market found higher prices. The question is, will it find acceptance above those prices? Currently is demonstrating that. We had the big 5-minute print. We left that topping tail and the market immediately moved higher. And if you want to take a more deeper look at it, acceptance acceptance never arrives. This is where like the real-time information really shows up. Price can trade above a level. It doesn't necessarily belong there when buyers fail to build value above breakout areas. The auction becomes very vulnerable. That is not what we're seeing today. I think that narrative can be, that idea can be put to rest. Let's see what happens here. We know what we're looking for in terms of the blueprint, in terms of your trade plan. Again, this is a good time to make sure to have a trade plan. Make sure that you reference that, have an idea of what you want to do. You can see we're already opening up quite bullish, and this is a good time to reference that trade plan. So what we saw last week, when buyers took price above the all-time high, above the overnight high, and it failed to demonstrate acceptance, we're seeing the opposite this morning, right? Where those buyers were vulnerable, we're not seeing that today. This is demonstrating very strong acceptance above a significant reference point. Let's see if we can get above and look at yesterday. Let's see, what was that high here? Hang on a second. Yeah, I mean, we're into the pocket. Now we're monitoring for acceptance. Last Monday, so let's just walk. I'm just going to talk myself through it. Last Monday, we got a look above, no acceptance, back into range, and that became the high of the week. This week so far, we're seeing look above, acceptance, value building higher, buyers defending higher prices. Okay, we have buyers that are bidding up the market in the early session, and they're gaining a following. And now remember, the breakout is never the signal. The signal is acceptance. Anyone can buy a breakout, but we want to see if the market can stay there. Can it hold a higher value? Does it demonstrate acceptance? And then then we can move to, hey, this is a good scenario where value is migrating higher. One of the biggest tells, if you're in a trend move, is value migrating higher. If value begins to build above breakout areas, as we're seeing today, the buyers are conducting business, they're in control. Price can establish higher value, and prices can establish higher, and value will confirm that. What we saw last week was where a failed auction happened, where price tested above the prior high, it came back in. That's the distinction I think we need to focus on for this particular read. Last week we had a failed auction. This week we have a potential successful one. And if you're a seller, if you're bearish about this, sellers need to take back acceptance. At this point, sellers don't just need lower prices; they need a rejection. They need acceptance back lower, back within the overnight range, and value to migrate lower. Without that, buyers are going to remain in control. The burden of proof on this one is on the sellers, right? They have to prove it. And I think this is the biggest lesson, right? It's context change. As context changes, tactics need to change. Last week, it was sell to look above and fail. We were selling rips as the week progressed. This week, we're not going to fight a potential acceptance, an early acceptance. We're good. We're going to go with it. We're going to wait for the market to decide what it's doing. We're going to try to get as crisp a read on it as we can, and then we're going to execute. Let's take a look at our weighted AD to get a read on that. Okay. Okay. Again, even though we have this big down print, right? We still want to see the burden of proof still remains on the sellers, right? That's a pretty gnarly pullback, though. That's for sure. All right, let's see what our first 15-minute. Looking at it here, we can already see that we have a 5 over 10, a 5 below 10. So basically, this 5-minute print is going to lead. If we close down here, it's going to be a 15-minute selling wick, right? We can see that quite easily here. There's only 1 minute left to the first 15-minute print of the day. Let's see if buyers can hold higher value, can hold higher prices. Now, we've already traded twice higher, and each time we've come in quite a bit, right? So now what we want to see is, okay, the read changes a little bit. We want to make sure that those buyers that came in initially were met by sellers. We had those buyers gained a following. They drove prices higher. Now, those new buyers that came in ran into a fresh tranche of sellers. Yep, and you can see here that we are now back below the overnight range at 75.78. Just be cautious here. I have not executed anything. I'm still getting my bearings here for the day. Let me know what you guys are doing. $75.78 is the overnight high. Our weighted AD is positive, but not very strongly. I think this is a good. Let's see if we can get the close. The 15 is going to close. Jay Morrock points out NQ did the gotcha where it looked super weak for 3 minutes and then ripped. Bit of a chop, trying to stay on my toes, think it holds. Yeah, me too. I'm trying the long here. Heads up. I am long 75.80 quarter. Looking for 75.85 for the first scale. Trying to stay nimble here, right? If price rejects now and it comes back below the overnight range, then I want to sideline. I want to sit it out. I want to wait for more information. But if this level holds, it'll be the second test that holds, and then we've already faced and overcome 2 tranches of sellers. All right. So let's keep an eye on the potentiality for higher value, for the breakout to hold. As we know that on a higher time frame, we already broke above that 61.8. We've already broke above the halfway back from last week's high to low.
Target fill.
All right, got the first fill. So plus 5 points on the first scale, team. Long 75.80 quarter. I scaled at 75.85 quarter. Looking for 75.90. Plus 5 points on the first. I love the cash register ringing. All right, well, looking at my second scale here at 75.90 for 10 points. Let me just get the order in. Watching the order flow very closely here. It seems to have some momentum. What are my ticks doing? What are my ticks doing? My ticks are pretty solid. But more importantly, the ticks are not telling me that this is an area. We're not in extremely high ticks, right? If we were in extremely high ticks, then I'd probably be taking that second scale here, because I would be thinking, okay, I'm going to sit through I'm going to get a pullback here. Let me take it while it's here. I'll walk away. I'll reevaluate. I'll tighten up my stop. But instead, what we're seeing is that we are in basically ticks are at 86. Okay, so yeah, I'm okay with holding this a little bit longer. See if I can squeeze a little bit more out of it. I mean, that's just my trading methodology. This is a good time to really ask yourself, you know, what is my approach? How do I see it? How do I want to react to the real-time information? How do I want to manage my trade? Again, I have a desire to hold my winners as long as possible, right? Because it's not so much of a desire as it is just it helps me have a better Sharpe ratio. It helps me maximize my winners. It keeps me out of bad position. It gets me out of trading more. So yeah, I definitely want to try to hold my trade as long as possible. All right, plus 12.5 on the second, plus 12.5 points on the second. On the little loss of momentum here as we retest the high, I want to make sure that I book it while it's there. I still have one runner, and I'm going to tighten up my stop just below this low right here at that 5-minute low. All right, so I've booked 17 points on the trade. The open risk on the trade is now 3 points. So if I do get stopped out there, the trade will still net a 14-point profit. Thanks, J Mark. Appreciate it. Yeah, that's my. I agree. And the order flow is kind of confirming that, you know, and the ticks are confirming that. The tick was not telling me. I was able to squeeze out 2.5 more points out of what would have been a normal 10-point scale for me because of the real-time read on the ticks, right? So our ticks were at 86. That's not an area. That's not a tick read that it was telling me that a pullback was imminent. All right, so with that real-time read, I was able to squeeze out a couple more points out of the trade. Again, I just want to go back to, you know, a play-by-play on what we saw today, right? Early coming in, I said, hey, we need to be on alert for what happened last week. Always keeping that recent context in mind, right? Because the market loves it doesn't repeat, but it often rhymes, as they say. And so keeping what happened recently, you'd be surprised at how many times that repeats. All right. So early on coming in, we wanted to be on alert for a potential look above and fail. Price came, rallied higher. We had a 20.5-minute candle above the overnight high. That candle closed in a doji, and essentially it closed right back or at the overnight high, 75.78. Okay, so immediately we had so buyers were aggressive off the open. Those buyers ran into supply, okay, and those sellers were able to push price back down to the overnight high, 75.78. All right. Then we saw another tranche of buyers coming in, okay, and they rallied price to a new high relative to the first 5-minute high. Okay, took it higher by several points. All right, the first 5-minute high, 75.90. Those buyers were able to rally at 75.95. We closed at the high, but what happened? There were more sellers there waiting. There was more supply, right? So those second tranche of buyers ran into a second tranche of supply. So we're constantly waiting out. Who's winning here, right? Reading the liquidity, reading the price action, reading our candlestick charts in real time to assess the state of the auction. So we rallied higher. That second push to 75.95 ran into another tranche of supply. Those sellers pushed price all the way from 75. They actually rallied at 75.96. They pushed it all the way back down to 75.78, right? Nearly an 18-point decline. And what happened? Right where it bounced earlier, the breakout level of the overnight high, 75.78, those sellers, that second tranche of sellers, ran into another tranche of buyers. More buyers were sitting there waiting. We stopped on a dime right at our day time frame reference, 75.78. Okay, and there was a new tranche of buyers coming in, and now they're rallying price to retest that high. If you were a seller on any one of those dips, immediately you have to be tightening up the risk on your position, as it seems that up until this point, the buyers are being more aggressive. And if we're thinking about value, we're establishing value higher relative to the overnight range, as well as relative to Friday's distribution. Remember, in order to see a failed auction, we need to see price return back to the range. This is not what we saw today. And this is an excellent morning and an excellent open for us to give a real-time play-by-play read on the auction, because we've seen it happen repetitively twice, the same occurrence. And often the market is hard to learn from because the patterns don't repeat often enough for us to identify them and for us to learn from them. But here this morning has been quite different. It's pretty rare to see a lesson unfold where we can really absorb the information. Let's see what happens here. We're consolidating at highs. In essence, we're thinking value, right? Value is still establishing higher. Price is demonstrating acceptance above the overnight high. All right, now we're seeing an extension higher. Let's see if bulls can break it out. But obviously, we know we have a really good read here of who's in control. Good morning, Oz. How are you? Welcome to the day. Welcome to the day. Hey, Oz, if you're just joining us, we're tracking the ES. Okay, we had an excellent morning. So we had a great tape this morning to kind of go over a learning. While price demonstrates acceptance, we saw 2 potential rejections, and we saw buyers come in and respond to that rejection each time. So we're tracking the ES. Let me bring you up to date. So our overnight high was 75. Let me see, what was it? 75, 78, 75. I can't wait till we move out of the 75 handle. All right, so overnight high was 70. Initially off the open higher, now an open drive higher, bulls rally price all the way up to 75.90, and they ran into supply. The 5-minute chart put in a selling wick. Our earliest read, our earliest candle print told us to stand fast and wait for more information. Okay, so that we had a breakout above, but that breakout ran into sellers. All right, they ran into supply at 75.90. Those sellers, that supply was able to push price back down to the overnight high, 75.78. At that point, we were waiting for we were monitoring. We got to look above and fail like we did last week, but instead price held right at the overnight high, 75.78. Again, the breakout level, our day time frame reference. All right. So those sellers were met by more buyers. So now we had 2 buyer responses to 1 seller response. Those buyers drove price right back up to our current high, 75.96, 75. And those second tranche of buyers ran into a second tranche of sellers, and they drove price right back down to the overnight high again. And now we're moving higher. On the second test is where I executed the long. I got long 2 contracts at 75.80 quarter, and then I added one at 75.81 quarter on confirmation that we were moving higher. And I scaled one for 5 points. There was a real-time read. Typically, I'm taking 10 points on my second, but I had a real-time read. The ticks were telling me that it wasn't time to get out yet. So I was able to squeeze 2.5 more points out of that trade. I scaled the second contract for 75, first 12.5 points. And now I am sitting in the third contract with a net 17-point gain on the trade thus far. If my stop is elected, if my stop does get breached by another dip, then the trade will net me 14 points as I have my stop 3 points back from my entry price. Let me know if you have any questions about that, Oz. Okay, good. All right, so where's the next trade, I guess, right? That's the logical next question. So now we're building out our logic chain, and we were speaking about value being established higher, right? So relative to, let's just take a look at the higher time frame. Wait, I'm gonna check something real quick. Okay, good there. All right, I'm going to run into something at 76.05. 76.06 is where my next fib cluster is. So I want to keep an eye on that. 76.06. Yep. Okay, that makes sense. All right, let's take a look at let's use the Thinkorswim higher time frame. All right, so now what we're monitoring is, okay, so price is breaking up into and now revisiting this gap here from last week, where sellers took control of the tape early Monday and really pretty much dominated the week. Looks like those buyers are now being more aggressive and taking us above the halfway point, also taking us above the 61.8% retracement. And again, if we're building out that logic chain, this all started with an open drive. Okay, and an open drive is a market profile term. Okay, let me just monitor this. Okay, an open drive is a market profile term, and an open drive is one of the strongest opening conditions that you'll see. Essentially, when we open outside of the prior day's range, now you can have an open drive moving higher, or you can have an open drive moving lower. Okay, so the market opened above yesterday's high or below yesterday's low. Immediately we have an imbalance. Something changed relative to yesterday's value. Something changed, right? The price, buyers are either trying to drive price higher, sellers are either trying to drive price lower. An open drive tells us that the market isn't interested in yesterday's prices. So no, we have new fresh information, we have new fresh data, and the auction is bidding up or bidding lower. When price moves aggressively from the open as it did today, there's very little back and forth, very little rotation. The market starts moving immediately in one direction as more market participants are in alignment with the direction of the trade. Strong opens rarely need second chances. One of the biggest clues of that, and we saw that perfectly this morning, is the market doesn't return back through the open print or the opening area. So immediately, that's why this is a good point, why we always write down that open price, all right? So today we opened at 75.73 and the price immediately ripped higher in that strong environment that more traders were in alignment on the bullish side than they were on the bearish side. And we rallied higher. In open drives, value is often left behind as the market seeks, new value. Where is the new value area? Okay. Excuse me. Value, the volume point of control, and the prior balance get left behind. The market seeks new value, and it's not negotiating. It doesn't want to have anything to do with the prior day. So with open drives, don't fight it. This is this is where traders get hurt. They see an open drive, and oscillators often print overbought or, on the downside, oversold conditions extended. And you look here on our RSI. If I extend this out, you can see we have what would technically be a sell signal on an RSI. RSI is printing 85, nearly 85 on a 15-minute time frame. So you're often going to see divergences on open drives. This is where oscillators can get you into trouble. So remember that. Don't fight it. And just to put it all together, the hallmark of an open drive isn't the gap. It's the lack of pullbacks that follow through, that take out visible structural references that were formed during that open drive. And when the market picks a direction and doesn't hold back and it keeps auctioning that way, what we want to do is look for pullbacks or look for retracements, and we want to get in alignment with the dominant forces. So, quick cheat sheet would be, if you're opening outside the prior day's range and immediately you spot directional conviction, the open range holds, the opening print holds, and price extends clearly away from that opening print and value gets left behind, don't fight the drive. Don't fight it. Look for pullbacks. That's the easy trade. And that's the one that was going to keep you profitable. It's going to keep your evaluation. It's going to keep you in your funded account, and it's going to get you to pass those evaluations. Mark points out, of course, most of the Mag 7 looks red to me. It's tired, needs a cigarette. It's tired, needs a cigarette. That's funny. Big cap tech is all pretty red, but NQ still bid. Thanks for the color. Appreciate the commentary. Guessing it's chips and semis. Tesla's a big. Oh, Tesla's up 3%. Microsoft's flat. Apple's up 1.5%. Nvidia up 1.25%. Hey, so heads up, right? So here immediately, what stands out to me on the big board is that our ticks are starting to fade a bit. Nothing extreme, but something I want to keep my eye on. Conversely, what I'm seeing is that also the VIX is fading. So the VIX opened on a gap higher, and it's now well within the prior day's range and closer to the prior day's low than to the high. The Russell is continuing higher. It looks the most constructive for the long side of the three. NASDAQ was very whippy this morning. Very, very, very choppy. And crude is down to 73. Again, crude is just pulling back. Need to get crude in a higher time frame. All right. Let me know if you have any questions about that. Hang tight while I just take care of some little bit of house cleaning here. A little bit of housekeeping. Haha, that's funny. So now as prices consolidating at highs, we just consolidated for what, 10, 15 minutes? That's another clue. After a strong move higher, if we had another tranche of sellers, we would have been lower. Sellers would like to see a meaningful rotation lower. If not, what are they going to do? They're going to turn into buyers. For every time you have a seller that's in a wrong position, he has to buy to exit his position. That exit adds fuel to the preceding move, whether it's sellers buying their contracts back, or whether it's buyers selling their contracts after price moves against them. But here what we see is prices holding. So strong markets don't have to go higher immediately. Sometimes they just refuse to go lower. And you have to sit tight, you have to be patient. And we want to make sure that we have a clear read on what's happening. I think that's really important. Because if we're monitoring every single tick and every oscillation, it's easy to get confused. And think about it like this too. You can have a pullback in terms of a rotation, or you can have a pullback in time. Markets can correct in two ways: price correction or time correction. Right now, we may be seeing a time correction or maybe a time consolidation. Instead of pulling back 20 points, the market's simply resetting. What we do here is we watch the lows inside of this balance. All right. This is not the best place to initiate a trade in terms of a long, because if you do, you know, your exit is your structural reference is down to 75.78, right? And we're us trading 75.94. The risk to reward is not there. Oftentimes you'll see traders execute a long trade here, and they will buy, let's say 75.94, and they'll put their stop, you know, right here below this 5-minute low at 75.90. And while you're on the right side, while your read is correct, your risk management it could be better. And simply because there's a higher probability this low will get taken out before it moves higher. So if you're risking 5 to get 5 on this particular setup, your win rate is going to be lower, simply because price is oscillating and it's trying to establish and it's a very small time frame reference. So think about it like this, right? We have the setup, we have the structure, we understand the move. However, on this particular setup, yeah, maybe not. Maybe the risk management, it doesn't look really good. As long as buyers keep defending the lows of the consolidation, the structure remains intact. Higher lows inside the balance range are generally constructive. And when you start to balance like this at highs, breakout traders, you see these, whoever bought the move higher here is now impatiently got long, thinking price was just going to have another occurrence like as it did earlier. So it's going on this look higher. They were looking for a move like this, and now they are being proved wrong. You know, many traders want to see immediate continuation. The longer the market balances near the highs, the more emotional traders become, especially if they miss the move. Mini Sniper, question, Manny, would you entertain a short setup at the blue pin's first resistance zone? Yeah, I looked at that because I was so the blueprint's first resistance 76.15. So I was thinking about that in terms of what if price gets up there, if I'm long, what am I going to do? And if I'm flat, what am I going to do? So to answer your question, Sniper, yes, I'll entertain that short setup. It's on my plan, and it's my responsibility to take those trades. I'm doing a good job if I trade my plan. However, I'm not doing a good job if I buy this here. That's not a good job. That's not Manny being a good trader. However, now that we have the area identified, let's just make sure we have it clear here, okay? 76.15 is our first market blueprint sell, okay? So now we have some time to see when we get there. And we'll when price gets there, I'll certainly, that's where my focus shrinks. I'll start watching the price action. I'll see how we arrive there, how it acts. So what I don't want to do, Sniper, is I don't want to trade that on a first touch fade. So if price gets there and immediately touches it, I don't want to be sitting there with a limit sell, or I don't want to click it as soon as it trades there, because I'd be going against the trend. What I'd want to do is I want to see, are any sellers there? Was anybody home? Did anybody have the same idea that I had? Is this area? I want to see proof of life. Okay, I'm going to go ahead and tighten up my risk on this. I don't want to see, if prices get below 75.84, there's no longer a reason for me to be in this. And we are now squarely in our window. So Sniper, did that answer your question? If we get there, then I have the area. I understand that's a setup and it's my responsibility to take it. If price gets there, I'm going to monitor it and see what happens. See if anybody's there first. Yep. And then so let's say that if price does get there and immediately, it trades 75.16 and there were sellers there and immediately we start to trade lower. All right. I just got stopped out for 4 points on the trail. So pretty happy about that. I mean, I could have gotten a better fill on the last one. It just never hit its target. But ultimately, the trade netted 21 points, and then you can't be too angry about that. All right, so now look at this. Excellent time so here, as we get new information, right? Look, these buyers ran into another tranche of sellers. And while they were trying to extend it higher, price is right back where? Now we're right back again to testing the overnight high, 75.78. We just traded down to 79.25 again. So now, in order to maintain the trend, we're going to need to see a new tranche of buyers come in and support price, absorb those sellers. Quick read on our internals. We're trading 1-to-1 positive on the NYSE, 2-to-1 positive on the NASDAQ. Let's take a look at the weighted AD to get some information there. Okay, squarely positive. We see our histogram here above the zero line, as well as our regular AD line is above the zero line, although the AD line is coming down into test that zero. Next thing I want to do is now I want to make sure that I have, let's see. So a few times a week, we're going to be able to share the SPYGATE. Again, I encourage you. I mean, I constantly have SPYGATE on. It is provided to our Pitbull Traders trader funding clients for free. But I want to have that up. And I want to be monitoring the institutional activity, right? Because now we're coming right back down to the overnight high, again for another test. And this is why this matters so much. Okay, I got the green light to share it. So you can see here, this was our early morning battle confirmed by the institutional activity. And now we can see that the sellers are being a little bit more aggressive, and now we're back below. Now heads up, we're back into the overnight range. Big heads up here, guys. We're seeing a potential shift. And look at price wicking again, another tranche of buyers. Okay, another tranche of buyers getting price right now, right back over the overnight high. So this is more of a time to sit on hands, right? So we there's definitely a battle going on here. We can see that clearly. It's verified in Spygate. You know, larger institutional players are battling it out. Let those guys figure it out. Let's wait for a clear read on direction, and let's wait on more information. If you missed the first trade, what you're looking for here is whether if price establishes acceptance back below or back within the overnight range, then you're stalking short scalps. You're looking for a move back down to the overnight value area low. All right. Aggressive traders are selling this retracement to the overnight high at 75.78, looking for that entry really close to their exit, trying to, you know, get a low risk entry to see if and test their theory to see if we're back below the overnight range. I want to test it. I want to see the market came back down. I'm not sure. I don't think that there are going to be more sellers down there. I don't think that there are going to be more buyers to drive us higher. So they're entering those short trades, all right? 75, 78, 75, 77. They're looking for continuation lower. Now, the question you have to ask yourself is, are you an aggressive trader? What kind of trader are you? Those are the type of questions you want to have answered, though, before the trade happens. Every trader has a different identity, a different profile. Typically, you want to tailor that to your personality, to your risk appetite. Okay. I am executing that short trade. I am in it. I am with the aggressive guys. I am with the aggressive sellers. Short 75.77. Looking for 68 for the first 5-point fill. Sorry, that sounded so cheesy. Oh, I need this to be an OCO. I have to get something to drink. I am so parched. Hang tight, team. I'm going to lock in this next order. I'm short 75.68 on the move back into the overnight range. I'm short 75.77 on the move back into the overnight range. I'm looking for 75.68 for a 5-point fill. 67 for a 10-point fill. Excuse me. And then I'm looking for 62. And then I have to get something to drink. Plus 4 points on the first. I'm just exiting. I'm going with the market here. I'm just exiting this short trade. I'm scaling one contract at 4 points on the loss of momentum. Just want to make sure I take some off the table, tighten up that risk, and put some points in the bag. Still looking for 75.67 if I can get them. And then expand this lower in case we do get a move that back down to the overnight volume point of control. And that would be located down at 75.62 quarter. I'm going to move stop now. So see how we're stalling here. I want to move my stop. I'm going to put a stop in at break even on one contract. I got plus 4 points on the first. Now we're getting that extension lower. So yeah, pretty good pretty happy about that. Let's just see. I'm looking for 67 on the second for a 10-point fill. See if we can get it. All right, boom, got it, team, got it. Plus 10 on the second, plus 4 on the first, and then plus 10 on the second. Hopefully everybody understands the play there. If you don't, let me know and I can give you a play-by-play right after I get something to drink. I will be right back. I'm so parched. Hang tight, team. I'll be right back. Hey guys, I'm back. All right, guys, we're getting the move lower here. Nice follow through on the aggressive short, on the close back below the overnight high. Does everybody understand kind of the thinking behind that trade? Why the structure made sense? Why it made sense to sell it at 75.77 after we got the strong close below? Okay, so what happened here? Just quick play-by-play. We had the strong close below on this print. Let's just get this tool here. We had this strong close here, okay? And then I entered on this retracement, and I took 4 on the first, 10 on the second. So with netting a 14-point gain on the trade thus far, working a 75.45 bid for a potential 30-point gain. Okay, yeah, Bruce. So here, check. So Bruce, were you here? Have you been here all morning? Just, I want to make sure I don't get repetitive. That's all. So I know where to pick up from. Okay, off and on. Okay, no problem. Let me give you a walkthrough, right? So earlier this morning was a really great open in terms of being able to explain and read real-time price action. All right. So what happened this morning was, I'll give you the walkthrough. Let me just expand this chart as best I can and try to get this. Okay. Hang on. Okay. Let me just get the read here. Just hang tight, Bruce. I'll be with you in a sec. Let me just look at what the okay. So value area below the overnight range 75.38. I'm back below the overnight point of control. We got a runner here, guys. All right, so Bruce, so this morning coming in, we were monitoring. We had our open print at 75.73 quarter. All right, so price opened up at 75.70. Let me see. So price opened up at 75.73 quarter. So immediately, all price could do was go down basically a few points below that. We opened up at 75.73 quarter. We made a low at 75.71. Okay, so immediately we were initially coming in, price opened and rallied higher. But we were on alert. We were thinking, hey, we were remembering last Monday. We wanted to stay alert. We wanted to be mindful that the last week we had the open drive, the look above Monday's high and fail. So we were cognizant of that. We kind of had that in our mindset. All right, staying on alert for that. We wanted to see price prove it. It rallied higher and it met a tranche of sellers, right? And they closed right back out the overnight high. So we broke out above the overnight high and we met sellers. Overnight high, open, we rallied. We closed on a selling tail. But look, price, we immediately on the next open, what did price do? It rallied and took out all those sellers. So the overnight high held on the retest, and then it moved higher and took out, eclipsed where the sellers were active at 75.90. And not only did they eclipse that 75.90 high, they rallied it high at 75.95. But then they ran into more supplies and they drilled it back down to right back to the overnight high. Tested the overnight high again. And what happened? Those sellers ran into supply again. These sellers ran into supply and we held the overnight high almost perfectly. This is where we got long, 75.80, 75.81. We got 5, 12, and then 4 on the last. Price drove higher. At this point at the high, we were thinking, hey, higher value, developing higher value, consolidating at highs. This is bullish price action. In order for that to change, we need to see a significant structural shift, right? Because we were open drive, positive internals, every seller, every reaction to the higher price action from sellers was met by buyers. So at that point, we're looking long. But then what happened? Those sellers were unable to extend higher. So we made the initial high roughly at about 75.97. We went up to 75.99 quarter. We put in a topping tail on the 5-minute and we came right back in and took out the structure. At this point, I was talking to the team here and I was telling them, hey, if you took this breakout long, this is poor location because your stop has to be here. And it's not great risk reward to long it on this breakout looking for higher price action. That's not really a great risk reward because you can just get stopped out on a basic price rotation. All right, so following that, price came back in. We put in the topping tail. This 5-minute print took out the prior 5-minute print. Look at the next one. That was the tell. All right, so what did price do? It came all the way back down. Took out this prior 5-minute high, but then on the very next print, we were back below the overnight high in strong fashion, right? We didn't just wick at the overnight high, which was here. What did price do? It didn't wick. It tried to on this print. It tried to wick here, and look, we opened right here, and then we one ticked higher, and then immediately closed strongly below. And that 5-minute print closed at the low of that, at the low of that range of that 5-minute bar. Okay, so then at that point, I was telling the team, so aggressive. So on this print, on the next 5-minute print, we came back up to test the overnight high at 75.78. And I alerted in chat. I said aggressive sellers are trying to sell this 75.7, this retest of the overnight high, trying to get an entry close to their exit on a retest and the structure shift. Because now All of these buyers are wrong. All of them are going to head to the exits, and we're now going to try to participate in those buyers becoming sellers and driving price lower. So thus enter the trade here, and we got the move lower. Does that make sense? Let me know. I think it's a apprentice trader. Hi, Manny, you here from the. For me, the screen is hard to see it as it is very small. Is it just me, or can you make your screen any bigger? Yeah, let me see if I can help you out. Apprentice, always happy to help. Hey, Bruce, let me know if that helps you out. If not, okay, you're welcome. You're welcome. Okay, cool. Apprentice trader, welcome to the show. Let me just see if I can tighten this up for you here. See if I can get you a better presentation, okay? Guys, if you ever can't see anything, it does you no good if you can't read the chart. So just let me know, but buzz me. I can, we can make the adjustment. No problem. Apprentice trader, let me know how that looks. Again, yep, you're welcome, Bruce. Happy to help. Again, so another thing that we're focused in on is, look, when my entry happened, where was it? I had SPYGATE confirmation. And this is why, guys, if you're trading a prop, I mean, if I wasn't a part of a Pitbull team, I would probably buy an evaluation just for this tool. Seriously. So this is where they tried. This is what? This is 10:12. What was the entry? I need to flag it. It was 10:30. Okay. So I remember being on SPYGATE. My entry was at 10:30. Team, look, this is why this tool is so strong, and why you need to have this in your arsenal. I mean, you got to set the deck in your favor, and this is a really easy decision. All right, you buy a $50,000 valuation, and you get SPYGATE a part of it. No brainer for me. But on the way coming down, when I sold it, look, these were the buyers that drove price higher. The sellers reacted each time. They sold it again, but they tried to buy it, but these sellers, look, sell, 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 sell. Thus the entry, thus the move lower. They just visually, you can see the red to green ratio. Red is winning. There's nothing else out there like it, especially for retail traders. Having insight into what the institutional money is doing, I mean, immediately that gives you a notch on every other retail trader. Immediately, that also gives you insight into what the larger players, the larger institutions are doing. I mean, check it out, guys. Look, these sell programs. I'll show you right here. This is why this matters so much. Let's just keep one eye on price action here. We're consolidating at the low. I am at what, 75.71. So look, guys, every sell program here. This one was 1.5 billion. Wait. Yep, Yep. Wow, that's why we sold. That's pretty impressive, to be honest with you. I'm used to seeing 200 million, 300 million. But look, you can see down here. This was off the open. Off the open, you're always going to see large volume. I didn't even know it was this aggressive. That's why we're getting this move lower. That is extremely aggressive price action. I mean, extremely aggressive selling. I normally just wait for the sound. That's a buy program. That's a sell. That's a buy program. That's a sell. Just so you know, familiarize yourself with it. Because while I share it for free, you can use it as a tool in your trading. That tool, there's nothing else like it. I'm not just saying it because I'm part of the team. if I was trading by myself tomorrow in some other country, say I decide to leave the US and trade in Paraguay or something, some weird, strange, odd country. If I had SPYGATE, I would know what the guys on Wall Street are doing. That's true edge. And that's what we offer here. That's why being around the right community is so important. If you're trading prop firms and you are buying an evaluation and they're just giving you the keys to an account, but they're not giving you the lessons, they're not framing structure with you, they're not giving you the tools like SPYGATE, they're not giving you tools like the execution clock. There are better products out there. And I'm not just saying that because I'm a part of the team. I'm saying it because this is real value add. Get your evaluation at pitbulltraders.com, and it comes free with the SPYGATE. Try it. I think you'd keep an active evaluation just for the tool. I know I would. I mean, look, that one trade paid for, well, I'm not going to harp on it. You guys know. I had traded 3 contracts. I took 4. I took 10, and I have a bit of a gain in this one. And now let's discuss where my exit is. All right, so let's get back to the real-time market, okay? And let's talk about the structure, the structural shift. We already understood. I just explained it to Bruce F. Now, what's next? All right, well, the what's next is, for me, is where's my exit? But I want to frame it for you guys that maybe didn't participate, in the aggressive short. All right, so now what you're looking at, what are we looking at here for? What would get me short if I was flat? All right, so let's look at the structure. Let's build out, let's develop a logic chain. We already know we have price moving lower. We already know that in terms of the execution clock, and if you're not using the execution clock, apprentice, I suggest you go to my X feed. Go to my X feed. It's at Manny_trends, and you can find more insight to some of the tools that I use. I also post my trade plan there, and I post part of my trade plan is a timing model that we use on a daily basis. So for you guys following I know many of you are using the execution clock. I know many of you using the market blueprint. Now my exit, because I'm basically here in the middle of nowhere, right? You guys know that my trading style is to try to hold on to my winners. As long as they keep working, I'm going to keep extending on my runner, and I'm going to exit when either there's a structural shift and I'm stopped out, or I enter one of my time-based windows. If I'm entering my time-based window and I start to see, and I'm running into a support, immediately what am I thinking? I'm thinking about tightening up. I'm thinking about, am I going to take the trade off? So I am at a support area. I'm just noticing that now. What was that? You guys heard it, right? You guys heard what happened at the support, right? It was another sell program right at support. Okay, so that's one data point. Excuse me. What I don't want to do is I don't want to panic click. I want to take an exit that makes sense. I don't want to take an exit because I have 30 points. I want to take an exit that makes sense. I want to be process focused. Trades will come and go, but if I maintain a strong process, then I'm always going to net points. And I am at a support. I am in the early part of my window. And now my thinking shifts to, what is my goal for the day? Is this something that Is this a trade that I want to net? I want to move on to the next idea. So immediately I'm going to tighten up my stop. I don't want to see price eclipse this rally high on a tiny time frame. So that would be, I don't want to see price get above. I want to make sure I lock in some profit. I'm not going to leave this on forever simply because I'm that close to the window. 75.56. That would net me 20 points. And so I'd be giving up, so 75.55, I'd be giving up 10 to get a move to potentially this support. I'm risking 10 to get another, what, this low is 40. And in my stop, my exit, I would want my exit to be, let me go back to the higher time frame. Hang on, guys. I'm just going to walk you through my thinking on how I'm going to manage this trade. So I want to take a look at the higher time frame. This is a bit wide, so I want to go down to maybe a 2 hours, 2 hour chart. All right, I'm back. Look at that. Look at that selling tail. Wow, what does the 60-minute look like? It's a pretty bearish print. My internals. Hey, the VIX. Oh, so the VIX came and tested that low. And it bounced really hard. All right, this does suggest to me that we should see some follow through. The question is, do I maximize the exit on the trade? Am I going to risk 10 points of gain and get stopped out of 75.55? I want to at least see another 10 points profit or a potential 15-point profit. So that would put me at 74.540. I would be looking for a move down to 75.25. All right, so I'm just walking through this in my own, as I narrate the open market. So thus far, we are consolidating at lows. Let's see what the weighted AD is telling me. Okay, look at that. My weighted AD now is printing red. Right? Okay, so that's a confirmation. That's one data point that suggests, hey, maybe we can get a little bit more out of this trade. I am at a support, but I'm a little early on my window as per my trade plan. Again, this is why it's imperative that you have a trade plan. It becomes your North Star throughout the day when volatility is high and you don't know how to make a decision. Go back to your trade plan. What should I do in this moment? Well, I'm digesting so many data points that let me just go to my trade plan, because I don't want to make a bad decision. We are consolidating at this support. So is this a consolidation and a potential turn higher? Or are we going to see some follow through? What is the condition of my ticks? Are my ticks telling me that, hey, you know what, maybe we should take an exit here? Okay. The ticks are slightly negative, but the tick is not at a point where a bounce is imminent. They're not at negative 600, negative 800, negative 1,000. All right. If they were, then I'd likely be thinking, okay, this move is likely over to the downside. I'm going to take it off the table. It's probably going to retrace. I don't think that risking 10 is going to get me another 10 or 15 points. For me, holding trades longer there's also an intangible component to it. So if I'm risking 10 right here, I also look at it as, hey, I'm also staying out of another trade. I don't have to execute something. Okay. All right, getting some extension here lower. Thus far, being rewarded for that hold. Let's see if this 5-minute print can, let's see if we get a 5 below 5. Currently, we have an incomplete auction at the low. Our ticks are not extreme. Let's check SPYGATE, all real-time reads. We just had another sell program fire off. The low 75.38 quarter is an incomplete auction based on the order flow. Hey, let me know if the charts are more clear. If you guys are watching on YouTube, let us know what the read is on the chart. All right, look at that. We just went down there, one tick that low, and then moved higher. I want to be mindful of that. Okay. What? No, I'm go see mom. Mom's in the back of the house. Thank you, Delphine. I hope it helps you. I hope it helps you I hope it helps you in your trading. Again, you know, we want to stay cool. We want to have that mindset of abundance, right? There's always going to be another trade. I'm always going to nail a good trade. You know, this is not a one-off event. We want to make sure that our decisions are well informed as best we can with the information that we have in front of us. And we also I also always want to be okay with my decision. I want to know that, hey, if price rips right now up to and hits my stop, am I going to be okay with it, or is it going to affect me emotionally? So I have to accept right now that while there's a 34 5-point game in the trade, it could rip against me and I would only net 20 points. Make sure I get the 20. But I'm okay with that because I'm looking to stay in the trade for as long as I can. I'm looking, that's just part of the way I trade it. All right. So now we're getting some good follow through. Time's on my side. Did you guys just hear the SPYGATE? So we have more order flow that's confirming the position. I'm looking at my ticks right now. I'm trying to figure out, okay, if there's something, or if I'm see some early signs of institutional buying, but that's normal in terms of what we're seeing on the sell side, right? Look at this, all these sells. Hard to fight that, right? So now let's go. Now I want to go back to the market blueprint. I want to see where's my next support, and this support at 75.40 is, you know, in reality, it's not really broken. You know, we could still trade up. Okay, so 75.40. My next support is 75.20. Wow. Okay, so for me on my trade plan, I could technically, oh God, oh, whoa, what happened there? Yep. So I just took out the 35 points out of that trade. I had a buy stop in there, order entry error. So I closed it out immediately as I'm off my foot. I'm on the back foot at 75.30. I just closed the trade. I took the 75.30. I took 35 points on the trade. I want to close it out. I want to reassess just simply because I had the wrong entry type. I had the wrong order entry there. And it got me long one contract, got me short one contract right at the low. Fudge. God dang it. Thanks, Tyson. Appreciate it, bud. Yeah, I had a sell stop. I wasn't paying attention. All right. I'm not holding this, man. I'm out. I mean, God, I'm like, I could not have a worse position right now. I am short in a buying tail. Oh God, let me see if I can wiggle out of this. Oh, the ticks just hit extreme ticks on the low, man. I gotta rip this. All right. 28 net point on the 28 points. I took it off. I think it was a 7-point loss on the order entry fudge. 28 yeah, so 35 on the first, -7 on the second, so 28-point net on the trade. Thanks to my good friend, to my good buddy from the IM Pro Room, Tyson gave me the heads up. And just as that order filled, you know, obviously there's a little bit of a delay. But yeah, I'm, you know, hey, that's trading. You know, no one's perfect. Really? My Twitter page is deleted? No way. Are you serious, JB? Oh, let me check the X account. Hang on. Let's see. I still see it. That's what mine says. It still exists. I see it. I still see Manny X. When to look at your clock. Everyone crashed out when you told that. That should be, imagine. Look on fail ES regular training hours. It's back. Yeah, I see it. It's there. Hang tight. I have to just handle something here. Just give me a 1 second. Quick breather on that. I just have to answer this email. Hang tight, guys. Got some. I have to moonlight. I have some coaching duties to respond to here. Then I want to talk about that. What just happened right now in real time. I think that gives us some good. That gives us some solid content to expand upon, to talk about. Okay. All right. Easy money, look below and fail. Look below and fail of what? 75.28. The regular trading hours low. Hey Terry, welcome to the pit. Terry, where are you checking in from? Oh, you're apprentice trader. All right, cool, dude. Welcome. Thanks for clicking that link. Let me know if you can see the charts. Terry, were you not able to? Oh, good. UK, what parts? Yeah. So Terry, were you not able to? Were the charts unclear on Northwest? All right. Just real quick, if you don't mind giving me some feedback. Always, feedback is so important to this. We're always trying to make sure that we are putting on it doesn't do anyone good if we're broadcasting and not helping anyone. You can't see the chart, right? So it was very dark. Okay, on YouTube it wasn't clear. Okay, thanks for the feedback. Thanks for the feedback, Terry. Appreciate it. Hey, welcome to the pit. Immediately you can I can bring you up to speed, but I think you caught the trade, the move lower. And team, what I want to talk about right now, and I think that this is probably better information than a winning trade. And it's what just happened to me on that loser. On that, on that order entry mistake. It wasn't a loser. The trade was not a loser. Let me just really quickly scan the market. Let me just make sure that I am not at an area where I want to do any business. So for that, I'm going to go back and check my trade plan. Okay, I know that I have set up support buy at setup number 3 at 75.40 to 75.43. Okay, so that's an area where I can take, as for my trade plan, it's an area where I can do business, right? That's an area where I want to shrink my focus. I want to pay attention to, and if I place an order, if I place a trade there, for me it would be valid. It's part of my pre-planned setups. So now that we are below it, just walking through this really quickly, I'm just going to walk you through the real-time read. All right, so what we have is what happened last Monday is unfolding today. It just took more time to unfold. But I'll cover that too. But so my level is 75.40. Let's just clear this out. I want to make sure that my level is framed as a band, right? So it's 75.40 to 75.40. 3 or 4. Okay, so this is my resistance point, right? That's an area where I can do business, but now we are chopping and consolidating, right? Okay, so are we bearish or are we bullish? I don't know yet. However, per my trade plan, I am at a support. We lost it, and now we're trying to price. It's either going to do one of two things. It's either going to act as resistance or it's going to be reclaimed as a support. Okay, so that's what I'm looking at for right now. Again, now I'm going to go back to the trade plan, and I'm going to look again, right? So what in my trade plan, is there anything in here, any more insight that I could use? Yeah, sure. You know, I know where I'm at. If I wanted to trade this as a short 75.40, I do not have an ideal time read. I'm now entering my window, and although it's certainly very early in that window, and again, price is king. Price action is everything. Price is 80% of the decisions I make. Time is maybe 20. So now I know that I have this area where it could hold, or I'm looking for a low pivot. Okay. Add a support into a low pivot. Okay. So now what I'm looking for is one of two things, right? Pretty simple. Let me just move this chart out, get to that, and then I'll talk about that order entry mistake. All right, so what I'd be looking for here is I want to see price consolidate. Starting like drawing with this thing. So we came down, we moved down here, we tested the support just about here. We bounced twice, and I'm looking at these two prints here, right? Where we kind of wicked twice, and then sellers came back in and pushed it lower. Okay. So we came back, we bounced, mediocre bounce, we moved lower. Now we have our current low here. Now what we're seeing is price on to balance. We're coming down, almost like a micro head and shoulders look. Okay. So because I'm at a low, because I'm at a support into a low base window, what I wanted to see for a long trade is I want to see price accept into this band. So I'm waiting for a balance to build. This balance is too young for me. It's too immature. And then ideally what I want to do, if I'm trading it long, I'm from the long side, just speaking about tactics here, right? I want to see it consolidate. I want to see it look above this area. I want to see it. I want to see price test that area multiple times. I want to see closes above there, right? I want to see that it's trying. And then I want to wait for that last dip later in this balance. And I'll take a shot at the long later in the window. So we'll give this like 20 minutes or so. Just again, going to stay one with the market, but I'm just trying to outline it and give people definitive. So I want to trade later in the balance, and I either want to buy it here, very close to my exit down here, or if I get another, we get another low that's below this. So say we have our low down here. Okay, I don't know. I'm just spitballing ideas, right? So then I want to make sure that when I do enter, then I'm as close to wherever my risk is. I want to try to get in here. If not, I'll trade the break up here. So I trade if we get an impulsive move higher, then on this move I'm looking for something like this so that I can enter into a long trade for a move back into balance, looking for an entry there, or like as I said right here. All right, team. So that frame out, I just wanted to share. That's what I'm looking for next. Looking for this balance to mature a little bit more. I want to see if we accept low, if we start closing that down near the lows of this range, if we start closing near the lows of this range, then that argument's off the table. Okay, so this is the long idea. This is how I would engage in a long. All right, let's talk about the short. Wait, Let me just get a snapshot of this, just in case. Okay. Now, for the short idea, say that my support here, say that that's going to, at the end of the day, we knew what was going to happen, and that turned out to be the resistance, and I should have been trading it short. So now, what would get me short? All right, so I got the same move lower, right? We bounced from here. This came down, bounced up, clipped it, came down, tested the low, and now we're consolidating in this range. I want to start seeing closes. Just erase this. I want to start seeing more prints like this than anything else. Okay. I want to start seeing prints that test the low. And then on a pop in here, if I get those closes, which we're not getting right now, if that's the structure that we're looking at, right, where price is just consolidating in the lower portion of this balance, then I'm either going to get in on the long, on the short, here, very close to my exit, knowing that I'm going against time and knowing that I'm going against the higher time frame trend. I don't want to risk very much on it. Or I'm getting short on a break. I'm just going to sell it if it breaks lower, like I did on last Thursday. That I forgot what the trade netted, but it was a pretty big winner. It was a decent sized winner. So I'll trade it on the break lower. Does that make sense? Like this. That's the support. Then I'm either entering up here or I'm entering somewhere around here on the break, and I'm looking for this to fall right away, but that's going to be an order flow read. But yeah, and then immediately so if I'm entering right where this arrow pointer is, what I want to see immediately, right away, I want to see a close below. And if not, shut the front door, I'm out. I'm not going to stick around. Don't stick around. Just don't even think, just click close. I want to see that. That's got to be the next print. It's got to. I'm not going to sit around consolidation in here. I don't want to get chopped up, and I'm not going to get short down here, get short at the low, and then we start chopping back and testing the higher portion of the balance, and then I'm down 7, 8, 9 points, and I'm off. I'm off my game. Okay, so that's going to frame out what I would be looking for in order to trade this breakout. Trade this balance area. Okay. Again, we'll monitor the conditions as we go. We'll monitor the internals. We'll keep an eye on the SPYGATE. We're going to keep an eye on the tick. We're going to keep an eye on the order flow. Hey, so really quickly, while we let this tape kind of balance out, wait for more information on which, try to see if the market lends any more directional clues. Let's just talk about, so I had the trade on the short. So I was short 75, 77, somewhere around here. On this close below these buyers, I knew they were heading for the exits. I got in on this retracement. Got 5 or 4. I don't remember. I know I got 4 on one of these. Or 4. Let's just call it 4. To be fair, I got 4. And then the next one got 10. And then the shit show happened. So I'm in the short, looking for continuation, and I was monitoring for an exit down here. The trade was oscillating in that 30 to 35 points of profit, and my risk marker was up here, right? I didn't want to see price get above 75.55 because I was short 75.75 and I wanted to lock in 20 points. All right. So I had an order. I don't remember exactly where the order was. Maybe I can look it up. Probably my last execution. That would be my last buy order. Okay, so I exited at 75.30 quarter. Okay, so that was the exit, 75.30 quarter. For a wait, no, is that right? No, so it was a 34-point gain. But then what happened was I made an error. I had a sell stop instead of a buy order. So I was bidding. I was streaming and talking and narrating the tape, and I thought I had a buy to close on a short position. Instead, I had a sell to open, which added another contract to the trade. So remember, and God, I'll be the first to admit it. If I've made more execution errors than the average guy. Execution probably matters more than analysis. And the trade idea was right. The level was right. The entry was great. The management was right, but the execution wasn't. I was managing the trade right. I just didn't execute the exit properly. You can have the right thesis and still make a costly mistake. So we have to understand every facet of what makes a good trader, every facet of where we can. All right, if you're a trader, you know this feeling. You're staring at the chart, you see the move, you jump in, and somehow you're always a step behind. It turns into this constant chase. Now, what if you flip that? What if instead of chasing the market, you started getting ahead of it? Not by guessing where it's going, but by understanding when. Because if you really think about it, this is the question that changes everything. Most traders get obsessed with price, finding the perfect level, the perfect support, the perfect resistance. But what if the real edge isn't where at all? What if it's when? And this slide right here lays that out. Two completely different ways to trade. On the left, that's reactive trading. That's chasing price, that's relying on indicators that lag, that's making emotional decisions in real time. We've all been there. On the right, that's the different game. The anticipatory trading, that's calm, that's structured, that's proactive. Because now you're following a roadmap based on time. It's the difference between being a passenger and actually being in control. And this is why it matters. A good trade isn't just price, it's three things: price, level, and time. But most traders are trying to win with just the first two. And that's why everything feels inconsistent. Time is the missing piece. But here's the reality. The market is not random. It moves with rhythm. There's a flow to it, a schedule, patterns that repeat. And once you start to see that, you stop reacting to what just happened and you start anticipating what's likely next. So the question becomes, how do you actually see that? That's where the execution clock comes in. It does one thing really well. It makes time visible. It takes something most traders feel but can't define, and it turns it into a structured roadmap you can use every day. And when you look at it, this isn't just another chart. This isn't more indicators. This is a visual guide to how the day can unfold. You'll see it clearly, defined time windows. These are the zones where highs and lows tend to form. It's clean, it's simple, and most importantly, it's actionable. Now let's be clear, this is not a crystal ball. It's not predicting one exact outcome. The market doesn't move one way. It moves in different patterns, different rhythms. That's why the execution clock gives you four main scenarios. We'll call them series days. Think about it like a playbook. You're not guessing, you're prepared. So let's walk through them. First, series 1 day. This maps out one possible structure for the day with its own timing for highs and lows. Then you have series 2 day, different rhythm, different flow, different turning points. Next, series 3 day. Again, another variation on how the day can develop based on its own time structure. And then series 4 day. When you put it all together, you have a complete framework. You're not reacting anymore. You're prepared for how the day can unfold. And this part right here is important. On the left, you'll see the raw timing logic, the foundation. On the right, you see how that gets turned into something usable, something clean, structured, and actionable. This isn't theory. This is built for real trading. So let's bring this into the real market. How does this actually help you when you're live? Let's go through a couple of key examples. First one, 10:30 a.m. Eastern. If you trade ES or NQ, you already know. The major inflection point in the morning. Now let's look at series 2 day roadmap. It highlights the window from 10 to 10:45 and right in the center time, 10:30. That's not random. That's a high probability zone for a low to form. So instead of guessing, you're prepared. You're watching for it. You're ready to react when the market gets there. Now let's move forward. 1:30 p.m., another key rotation time. Again, go to series 3 day map. Same thing. You got a defined window centered around that time. Another potential turning point. This is the edge. It's not vague. It's specific. It gives you timing, not guesses. And when you look across all 4 series, you'll start to notice something. These key times repeat. 10 a.m. potential lows on certain days. 11 a.m. potential highs on certain days. 2:30 midday rotation. 3:30 late day move. The clock puts all of it in front of you. So instead of reacting, you're anticipating. And that's the shift. You stop chasing. You stop guessing. You start trading with structure. You start trading with a plan. You start trading with timing on your side. And that gives you a completely different level of confidence. You're not getting faked out by every move. You're not late to everything. You're aligned. And for ES and NQ traders, this is the edge most people don't have. Not just knowing where, but knowing when. So I'll leave you with this. Think about tomorrow morning. You're logged in. Instead of staring at a blank chart, you'll already have a roadmap. You already know the key times, the key windows, the key opportunities. How different does that feel? Because that one shift, it changes everything. If you'd like to know more about the execution clock, go to pitbulltraders.com and click on the Trader Edge tab. Mic check, sound check, 1, 2. Sound check. Sound check. Sound check, 1, 2, 1, 2. Okay, thanks, Oz. Thanks, Oz. Let me see if I can get back up here. Thank you. Appreciate it. Appreciate it. Just trying to get the pit back up. Hang tight. Yeah, Renee, that's because I'm on StreamYard. I'm not in the pit. I cannot get audio in the pit for some reason. Not sure why. I keep trying, it doesn't work. Oh shit. Ah! It's working now. Hang on. My sound check. Sound check. Oh, good. All right. Well, let's see. Hang on. Let me see if I can get this. Oh, great. It's already noon. the duckling. Let me just see something. Okay. Let's check something here. Okay. Mm-hmm. Sound check. Cool. Thanks, Adrian. Thanks, guys. I'm not sure what happened. So yeah, I just kept getting like this mic error, and I went to StreamYard and I went straight to I went to our streaming platform, broadcast straight there, and then I came back and it was working there. So I said, well, all right. I was testing my mic everywhere and it was working. So I even like I took like a 30-second YouTube video and it worked. So not really sure what happened there. Not really sure. Yeah, it's odd. But I think we're back to normal here. I think we're back to normal. Let's just see. Yep. All right, guys. Sorry about that. You know, what would we do without technology? And it just, I just want to highlight, you know, how important guys like Marlon and Renee, the guys who often you guys don't see working for us in the background. I mean, without them, none of this happens. So just quick, big shout out to them. Let's just make sure that my camera is working. All right. Okay. Now I'm just going to make sure that I can get my screen share up. Hang tight. Okay, we're gonna try this again. Hang tight. Circle back to here. Log in here. Share here. Okay. Okay, just wiggling through this. Nope, not working. Yeah, I'm not sure, guys. It's working on the other platform. Can you guys hear me? Just give me a sound check. No. Nope. Okay. So. Not sure why I did that. I gotta try this again from here. All right. Dang it. Yep. Nope. It's not working. Dang it. All right. Let me figure this out. Hang on. Yeah, nope, it's not gonna work that way. Sucks, man. All right, I tried, guys. It's just not gonna work. I'm going to have to shut it down here. Let's try to figure this out. Let me see. What does this say? Missing the entire the community can't see me, so that's pretty bad. Can't even screenshot this one. That stinks. I really wanted to talk about that that botched order, but it's just not working. Let's see what Marlon says. Yep. Nope. Not working. All right. Try one more thing, and then if not, I'm gonna have to shut down.